let's start. The topic is blockchain investments, and probably all of us, all of you guys have a bit of crypto. We have a vision about this industry. You believe in it or not, I don't know. Maybe you still believe in it. So we would like to discuss what are gonna be the trends and how people gonna make money, how people gonna capitalize their products, and where we personally or our companies gonna put our money in the foreseen future. So first, let's start from the introduction. I think everybody can do it on their own, but also I would like all of you guys to add like what last year in crypto, in blockchain taught you. So what was the biggest lesson?
So hi, my name is David Shengart. I'm a co-founder of Swidom. Swidom is the agency that helps young and ambitious projects to achieve their goals through bringing necessary funding. So we help them to fundraise, and we speak to potential investors. We do IR job for them. So last year taught me to be cautious, be more careful. Last year was not what we expected, I suppose. It taught us that before choosing a business model for your business, you have to be very precise in deciding whether you ever need a token model, whether you ever need a blockchain. So we realized that hype in 2017 was a bit bigger than it could, I could imagine in 2016, and then 2018 taught me to be, more careful, and, when the company deciding what to do next, they should be really direct and transparent with what sort of business model they should choose and whether the tokenomics should be existing within their business at all. That would be basically my conclusion.
Hello, my name is Ruslan Gavrilyuk. I'm co-founder and president of TaaS Group. TaaS Fund is actually the hybrid model of a kind of hedge fund. This was the first tokenized ever closed-end fund that actually invests in early stage ICOs, TGEs, or whatever you say, and doing active portfolio management as well of existing cryptocurrency utility tokens. Last year was pretty good year. Why not? Yeah, it was a bit stressful for many people, for the retailers, but I think it was really good year. We got rid of a bunch of flippers. We got rid of a bunch of speculators that got burned. We actually that year had to happen because of making the investors, retail investors, without the certain background, without the certain knowledge, down to earth, as well as alongside with the funds and hedge funds and crypto funds, showing that there is no miracle, right? That there should be the substance behind. There should be the company should be mature. There should be the need for the product, there should be usability of the product, etc. So it was pretty good year, teaching us a lot of things.
Hi, my name is Szurek. I work at Insight Venture Partners. We're a New York-based venture capital, growth equity, private equity fund managing about $23 billion, just focused on growth stage software investing. I think most relevant investment within my portfolio or our company's portfolio for today is a Russian business called TradingView.com. If any of you guys use that for getting ideas and guidance on technical analysis and charting for the crypto space, very, very exciting platform. So I've been in crypto blockchain for a while. I initially got into it working with a company called Blockchain.info back in 2014. You might know that as the world's largest Bitcoin, Ether, and I think now, Bitcoin Cash wallet with about 20 million monthly active users. 2017 for me is a story that's played out in the past, and I think it's a story that will continue to repeat itself over and over again in crypto markets, which are more frothy and perhaps exciting than traditional equity or commodities markets, but it happens everywhere. And I think it's important, and I would agree, good and healthy to have those sorts of friction points in a bull market. For me in the US, it means everyone gets back to building software, which is where we need to go in this space, instead of running around being very excited about how much money they're making and all these ICOs and things. So, I feel very bad and sorry for everyone who lost a lot of money last year. I would say keep looking towards the long horizon and a bright future that's building around this space, and focus on where the value is really being created, not where the best marketing is. So that would be my overarching message.
Thanks, nice meeting you all. My name is Vladimir. I run the business development for the company named EXANTE, and we see great potential here in this region, but we operate globally. One of the projects with EXANTE being the core product as the global brokerage company or regulated company with offices all around the world. But one of the arms which we have is the fintech investment fund called EXANTE. I guess we'll talk more about it later on, but in general, I think last year was, in terms of being on the investor side, on the buy side, that was a good year as an opportunity, because the downturn in crypto assets, and just like my colleague said, the downturn in Bitcoin price and it gives a good opportunity to acquire really quality ideas, really quality projects at very good valuations. So I think maybe this year will be a bit better, but it's good that the industry shaping up, and we're seeing more and more projects with a real value.
Okay, so thank you. Let me also add, so I'm Yurii Filipchuk from the VP at CYFRD. It's a multifamily office, and I'm responsible for venture capital investments and crypto. And last year taught me that you have to stay focused, and like that the market and all the good vibes and all the theoretical stuff, it could be gone in 1 second. Okay, so let's get back to the trends, because actually we are here for a long time in blockchain, and whether you buy Bitcoin for 19K, you bought it for 4 cents, you're here for a long time. And we have some big vision about crypto, we believe in it. And currently, market is still underdeveloped, and everybody is curious what's going to be the next step, what's going to happen on the investor side. So some people are still waiting and waiting for institutionals, and they're telling that when institutionals gonna arrive, the market gonna change a lot. So guys, do you have any thoughts on that? Do we really need any institutionals here, and how it's gonna impact the market?
I think I can start about it, because in reality, the institutions are already there for a long time. It's actually funny because like a couple of years ago, there was such a fuss about institutionals buying Bitcoin. Everyone was waiting for institutional clients to start buying Bitcoin. In reality, what we saw in EXANTE, because EXANTE first wanted to introduce the internal EXANTE ETF, we had so many institutional clients, I mean, ranging from small to medium hedge funds to pension funds who were buying ETFs on the crypto assets. So I think it's not more about the type of the investors, because the investors are there. Everyone is watching the industry. It has to be the product. Because in EXANTE, what we see as the investable idea is it has to be global, first of all. So we do not invest in any local stories, right? Second, it has to be scalable. So it can start small, but we need to see that this idea can be scalable on a really global scale. It has to be, well, for sure it has to be innovative, right? Blockchain is innovative. And it has to be a clear vision for how do we monetize the product, the service from the beginning. Because the idea of gathering like we've seen so many ideas when the basically startups offer, we will gather so many users and then we'll decide what to do. Like look at, for example, companies from the tech sector, for example, Twitter, which turned like 13 years yesterday, and the company is still not making any money. So this is not the case. We're looking for companies who will generate a positive cash flow pretty much from the start. And of course, the team is also the most important part, because any company, any fintech company has to be, well, it has to have the team which is motivated to work towards the finished product. So I think I named just 4 points which probably not only for the blockchain project, but this applies to pretty much any business. I think I'll pass to the colleagues. Maybe they can tell you about like what things they say about it.
And sorry, I kind of forgot. The question was, are institutions investing in crypto important for the ecosystem? Roughly?
The question was basically, is it going to change the market dramatically?
Okay.
And let's get back closer to the topic, to the trends.
Yeah, agreed. So I think actually having large brand name institutional participation and investing in crypto is very important for 2 reasons. One, market depth. We look at what happened in 2017, 2018, when you have thinly traded markets across a bunch of fragmented exchanges. That's what enables assets to pop 2,000, 5,000, 10,000%, and then drop 90% within weeks. Once you just have a deeper pool of capital investing in those assets, they are more stable. So I think for all of us looking at the long term here, that's important. The second is for me what I get excited about, and it's part of why I get excited to come to Ukraine. I want to see people actually using these technologies. And so we look and do a lot of analysis around the adoption of crypto within various communities, businesses, and user groups. And the institutional backing behind these funds, as well as distribution of them to the masses, I think is going to be a critical linchpin for getting this ecosystem to where I think, well, hopefully we all believe it can go.
Yeah, I guess we have to differentiate pretty much crypto and blockchain. There is a huge difference, and the impact is different as well. When we are talking about crypto, the cryptocurrencies or distributed networks, do they need institutional investments? I guess no. Yeah, majority of them, because they are coming from retail for retail. When we are talking about the impact or the changes that we have witnessed for the last year, it is really crucial for the institutional investments have the different kind of tools like custodian and the tools that provide traceability, transparency, etc. for the funds, and easy to monitor, easy to report to different authorities. But what we see, JP Morgan has its own coin already, right? And many of the huge companies with huge actually amounts under management, they are planning to do, due to different reasons, or they're planning to launch their own coins or use the blockchain as the technology, as the technological layer to have more efficient transactions, more transparent transactions, more fast ones. Blockchain itself shows, we have done the research that shows it is that the blockchain technology and the usage of blockchain technology is growing with about like 80% of CAGR, if I'm not mistaken. That means a lot of companies are planning to use the technology and the products, but unfortunately we don't have many of them on the market. And due to the Deloitte research, it was done among the multifamily offices and hedge funds of the medium size and small size. About 90% of the funds are planning to invest or have already invested into the blockchain. but they don't mention they are planning to invest into cryptocurrency. So these are two different things.
Yep, just completely agree with Ruslan. And coming back to the topic of trends and institutional players getting big on that market, Yurii, not allow me to lie if I say that last year, beginning of 2018, we were at the conference in Frankfurt, and then we met a couple of big guys. One was from Mercedes, if I'm not mistaken. And that's basically to prove that the big guys were interested in the technology itself for a long time. And then speaking to the guys like Grayscale or Circle, they will definitely tell you that OTC market was huge, and it is huge right now, which is, they would tell you that many of those institutional players individually buying cryptos and different types of tokens for a long time. And then what to add is that whether this technology is used as the underlying technology, it's good. When the technology is used just for marketing, and this poll told us that exactly the same thought yesterday. If it's just used for fundraising, that's not going to work, not in 2019. If the technology is used where it should be used, that it solves certain issues and certain problem for the industry, for the company, that's basically what makes it valuable, and that's basically that will survive. When it's used for fundraising and marketing, that's not going to survive.
Okay, so thank you guys, and I see all of you, so all of us, we like some substance in blockchain projects. We got bored of all that marketing and fluff around it, so we're looking for something underneath. Like traditionally, venture investments. So venture capitalists, they look for two types of assets. Companies that introduce new kind of business model, like an Uber, Airbnb, or something like that, and companies that are looking for some kind of deep tech. Some AI companies with better code, some unfair advantage that lies in technological layer. So, on your opinion, like in the next 3 to 5 years, what kind of companies are going to be the most successful? Business model blockchain companies or deep tech blockchain companies? Okay, who would like to start?
I would probably say that both are important. If the deep stack company applies it wrongly, they still not gonna succeed. So it's a combination of both. That would be my simple answer.
So I think I see a divergence between what the winners look like within those two categories. Within deep tech blockchain, I think what you're actually talking about is something that's very important given what the internet looks like today, with in each country 1 to 3 centralized players controlling it. In the US, it's Google and Facebook. Hopefully you guys have seen some of the Andreessen Horowitz research or thought pieces around this, but there's a guy named Chris Dixon. I would suggest you look that up, around basically breaking the way the internet works today and rebuilding it on decentralized protocols around blockchains. That's the deep tech piece. In that sort of arena, you have extreme power laws where there will be one player, maybe two, but with mass participation and benefit from all the users in that ecosystem, in that community, because you can invest in the tokens or hold the tokens. So I think you have the deep tech reconstructing the internet with a much better engineering solution for all of us. And the blockchain business models, I think, is something that can be horizontally applied to almost any software category, depending on if there's a need for building a network effect or community adoption, or if it makes sense, to be honest. I think if you look at 99.9% of the white papers that were put out over the past 2 years, there's an inverse relationship between the long-term price of the token and adoption of the network, which is not how it should be. So I think we all need to take a step back and perhaps level set how we are starting out on building this stuff, but it's going to be very exciting when the internet starts to change for the better because of this technology.
Yeah, when we are talking about deep tech technology, it is what we see. We see actually the high correlation with the AI, with the IoT, and probably augmented reality, extended reality. The technology of blockchain, deep tech technology, cannot exist by its own and cannot grow by its own because we need the mass adoption, and mass adoption can happen through only the products. And as I mentioned before, there are not so many products on the market. And what we see from the vertical layer, or when we are talking about blockchain as the mean of fundraising method or marketing method, it might be helpful as well. I cannot say it is useless totally. It has a value. For example, it can help the VC industry as well, venture capital, for example, when they can tokenize their assets, tokenize the LP interest. That will provide much more liquidity for the market, and this is really crucial.
Well, I think just like my colleague said about the internet, there's this same thing going on with fintech, especially with the way traditional markets operate. Like it has so many parts which can be changed with the help of the blockchain. So I think it's definitely the deep tech blockchain that will challenge these industries.
Okay, guys, so to summarize, back in 2013, during the Andreessen Horowitz scientific panel, the outline of the meeting was that blockchain is the first time in the human history we can monetize the protocols. So that's why probably blockchain is going to be a combination of the both business model and deep tech. And in this case, deep tech and the IP of the technology itself going to be secured by the blockchain and its business model. Okay, so let's get back to probably something that's closer to us, to the speculation on the market, to what's going to happen, how it's going to evolve. So are we going to get rid of the speculation and volatility, or we really need it? Let's jump into the topic of initial exchange offering. So what just are your thoughts on that? Do you really think it's going to last for more than 1 year, or it's a new trend, and how do you see it?
It's really fantastic, don't you see? It already has been existing more than a year, I guess. For the last 1 year and a half, when you all remember, we remember the ban in China for all the people, for all the retailers and investors to participate in any kind of ICO or to use the blockchain technology. They didn't differentiate blockchain and cryptocurrency. So exchanges came up with the idea why we cannot launch on our platform the offering itself. So it already has been existing for more than a year. About the speculation, we are all satisfied when market is growing and everybody is becoming richer. We say we don't need any kind of regulations, right? But when it comes to the point when people start losing money and or the projects misbehave, they disappear with the assets, people start blaming and start saying, okay, we do really need some kind of regulation. The same thing happens with the exchanges. Of course, we would like to have more transparency, because for example, sounds really sweet when you see, okay, the cap is not so big, 4 million they are planning to raise. This is a substantial, mature company. But in fact, when you start calculating, when the offering is over, the valuation of the company all of a sudden becomes like 100, 200 million. This is the same problem that we witnessed with the ICOs, when the companies were overvaluated, they didn't need so much cash. The same problem happens here. And what I see is really lack of transparency from the exchanges, is who is doing and how they are providing the underwriting process, or some seed funding, or the private equity funding, or things like this. We cannot see. We don't see, and if you analyze the market, why they are trading at 200 million per day, and it is going down, and within a year you can see slightly the 1 million per day trades. Doesn't give you the answers to the questions. For me, yes. This is definitely a kind of speculation.
So, in my opinion, I find myself, tearing apart between two main questions. One question is whether the EO is the same thing that is ICO was the last couple of years or last year, or it's a bit more structured thing and a bit more regulated that will make a market more transparent and the fundraising process more transparent for all players, including the regulator player as well. I'm still not sure. As for me, it looks like this our old proverb: the same act, but the picture made from different side. So for me, it looks a bit different. All characteristics of it looks a bit different from to ICO, and many of the exchanges started and announced the launch of different types of where you want to call it launch pads, jump starts, and SIM, etc., etc. I can only say that the time will prove whether the model is right. Obviously, the level of control under how money are spent and used for the project and how they use it is a bit higher, which is a great thing. However, in terms of all characteristics, it still looks like the same old ICO.
Listen, all the market is about speculation. Even the stock market is about speculation as well. It depends what rules you are obeying, and these rules are for everybody, or just for one circle, for a group of people. This is bad, yeah, but if everything, the speculation itself is happening everywhere. It's not only in crypto, it happens in stock market as well, Wall Street.
I agree, but so would you agree that gas war, so the gas war would be better, like ICO gas war on Ether would be better than initial exchange offering all those limitations and stuff? So it's more fair, and it allows people with more technical capabilities to join instead of people with some underneath the black box of exchange.
So what's the question?
The question, whether old school ICOs that happened in 30 seconds, Brave or something like that, was it better than initial exchange offering right now when they happen also that fast, but we deal with a black box?
When it happened before, we didn't have any kind of compliance. We had the investors, anonymous investors, right? So the industry was evolving, and actually we met couple problems, and the industry or the players were trying to solve it. Right now, as far as I know, you have to be pretty much compliant before participating in this kind of offering. And this is much better for the project, much better for the industry itself, because you really have to be knowledgeable, you have to follow under certain regulations, and etc. This is a completely different story. Whatever it is happening, 30 seconds, 20 seconds, or 5 days, this is all about marketing and hype.
But still, would you choose Binance Launchpad or OKX Jumpstart?
I guess for now, none of them, yeah.
Yeah, I don't have anything to add. I wouldn't touch either one.
Yeah, same here. I don't think. Actually, I see the evolution with this launchpads, but it still doesn't change much. I mean, that's the same kind of ICO offering.
It will not change a lot because people, by nature, they're a bit greedy, right?
Yeah,
they want to get rich over the night, and some of them succeed, some of them not. And there are two sides. One is losing, one is gaining.
And speculation is actually good because it provides liquidity for the institutional players. So that's the market depth we were talking about. That's a speculation for the most part.
But yeah, I would like to see who is doing market making over there, and who is participating, and what's the requirements for getting into the seed round, or how does it take place? Because in the long run, yeah, you see that the people are just flipping the coins, that's it. And there is no real usage of the technology itself or the real usage of the tokens. If you are doing the project for agriculture and the people who are participating in the crowd sale or in the exchange offering, they are from medtech or from cryptocurrency community. That means you will have to spend much more money on the marketing to get your targeted audience. That means you are not spending much, really in the proper direction your assets, the capital, the proceeds. So this kind of speculation is not so good because it's not directed on the targeted audience. The people who are participating in the majority, they just want to get the benefit out of it. Without waiting.
Yeah, but what I would add, in the sense of decentralized nature, if you think about it, ICO itself was a bit more truthful, a bit more, what would you say it? True, a bit more truthful, wherever it is. Because, initial exchange offering, now you're dependent on CZ, or you're dependent on the chief executive of OKX. And he might decide that you guys are not that much investment attractive and get you off your launchpad or get you off, okay, jumpstart. But then when you were preparing your own ICO, it was basically all in your hands. Then obviously you got less controlled when you were doing that. And that is a bad thing probably. And that's why many of the projects had problems. However, in a sense of people controlling their own money, I believe ICO is still more direct, more truthful instrument.
Cool. Yeah. On that note, I have, I think, two messages to deliver or favors to ask. One, hopefully everyone knows this at this point in time. Do not trust the exchanges. Hold your own crypto. Keep your own keys. I'll say it again, but every year I think I have to say it again, so don't do that. Two, when Zuckerberg launches Facebook coin or whatever they're gonna call it, please do not buy that shit. There are going to be an increasing number of centralized platforms, excuse me, centralized platforms launching pseudo-decentralized tokens for additional monetization opportunities of you. They're already selling your data. They're already selling your intent to purchase. They're already selling your social graph. Don't buy it, please.
Okay, so that was beautiful to finish the conversation. I think it's going to be too hard to summarize everything. So let's just name each of us like 3 crypto assets that you would put in your retirement, in your pension fund. So, okay, I will start with that because you probably have those things. So, like to invest in 50 years, 40 years on my retirement, I would put in Bitcoin. I would love it to be Telegram Open Networks Gram. And I would think it's going to be Dfinity. So 2 Web3 0 protocols, and mean of exchange and mean of storing value Bitcoin on my side.
On my side, I don't know. That's an interesting question. Bitcoin, that's for sure because that's the guy. That's the one. It's going to be very strange, and then some people would blame me for that probably. But Ripple would be my choice. And because I believe in manipulation, guys, I do believe in that. I do believe in hidden agenda. I do believe in organizations that are covered. That's my story. And then the last one, I don't know, maybe T0, maybe Dfinity, something like that.
Yeah,
TaaS.
Yeah, definitely. This is number 1, TaaS. Yeah,
That's definitely TaaS, guys.
Yeah, second one is Bitcoin, and the third one is Moderator, I guess. Yeah. I wouldn't advise. This is not the advice at all. Please remind that. And Yurii, you forgot about Facebook. Yeah, you can add to ton. Yeah, same. Yeah. Of course, the same. Centralized, absolutely. No.
So I know Ether has its own technical challenges ahead of it. I still ride with, I think, the platform that has the most widespread, constructive, collaborative, and capable developer ecosystem, and they seem to be winning that still. It's risky, so again, this is not investment advice. That one could be at 0 in 12 months, but I think it's still the most interesting in terms of what's getting built. My faith in Bitcoin has been shaken over the years, but I would still put that one in. If we can get some bigger blocks or something to scale it, that would be cool.
Get Reef.
Yeah. And then I guess the last, maybe it's Monero, maybe it's Zcash, maybe it's Grosso Coin, I don't know. One of the anonymous tokens, if they can work, would be my last pick.
Well, if I have to really diversify out of Bitcoin for 50 years, that's kind of difficult, but I would say like 70% would go to Bitcoin and probably 10% to
Grimna?
Ether. Well, Grimna has been here for how many? 25, 29?
Less, I guess, 20 years.
Yeah, well, little less. Yeah. Well, Ethereum and probably some. I'm still in love with dollar, to be honest. So
USDT.
I would buy some sort of a stable coin. Maybe not. Well, of course not USDT, but something with a real asset behind it, like Yurii, Stasis, or whatever.
Yes. Okay, so do your own research. It was not financial advice, as it was said previously. And thank you for your time.
Thank you, guys. Thank you.
Sorry. Do you have questions? Do you want to ask several questions? We still have 1 hour for lunch, but a lunch will be a coffee and a cake or something like that. So just make your questions. Good?
All of you pretty much agree on the fact that due diligence and research is very important when it comes to investing into, well, any type of asset. Considering the complexity of technology behind crypto assets and blockchain in general, what would you be looking for apart from, well, obviously use case for the blockchain in a blockchain-based investment?
So, like on technical side, I think the blockchain is going to be an open protocol. Any blockchain project should be open enough. So I would look at the GitHub, at the comments and activity over there. If community is against it or they in love with it, so that's probably a good flag.
I would still kind of be checking the usual startup metrics, everything that should be done, the technology, how marketing is prepared. Whether the client is targeted right, whether there's any bottlenecks in their development of their product. I mean, there's many startup metrics, especially in marketing, that you have to take a look at, like LTV, CAC, and many of those guys. I mean, I would be, just putting them through the usual analytical process, maybe assigning a different score to a different part of their project, and then building up your own kind of scoring model. That would be my approach.
Yeah, when we are talking about due diligence, we can talk about that ages, and we have practiced and tried to make it as advanced as possible. I cannot say it works all the time, and what we are paying attention to, and actually the majority of VC firms and the hedge funds, they are calling that a kind of secret sauce, right? That nobody discloses you the due diligence or what drove them to make that or certain decision. And that is called allegedly the secret sauce. And I think that secret sauce, behind that you are paying attention to the team. This is the number one, definitely, about the possibility of the products to be implemented into the real life and the usage of the every one of us and benefiting out of these products or protocols. This secret sauce is called goddamn feeling, yeah?
Yeah, I agree with that. I think it's really two things. And I should preface this by saying I'm a late stage investor by nature. I look at things that are post product market fit and ready to scale. So this comes with that lens in mind. But generally, it's one, finding the right thing to measure. For some businesses, it's going to be user growth or transaction growth. For me, most of the time, it's growth in subscription revenue. But find the right KPI, and it's not just an exercise in what the right KPI is, but also running, I think, 2 bits of math on it. The second derivative first, so the growth rate of the growth rate, and then the retention of people that or businesses that are adopting it, and that'll tell you what's really got traction versus who put out a great YouTube video.
Not much to add here, actually. Yeah, it's all been said. Otherwise, it's a secret sauce, right?
Oh no, we gave it away.
Yeah.
I'm out of a job.
Good. So
Fired.
I think we're good, or you have more questions? Because at every question then means like 5 answers, yes? So let's maybe do that on lunch, or is it a short one? Okay, good. Of course.
Sure, I'll answer quickly personally. I mean, at Insight, we have a team of about 55 sourcing analysts who are very, very good at scavenging the internet for whatever is interesting and popping up. But.
Yeah, same thing. Yeah, you should have the group of analysts, or you should use some certain tools available on the market. And of course, the personal network and the network within the community you're working in with the cryptocurrency or crypto assets or blockchain.
I don't know, maybe find 15 different directions of the project that you would like to evaluate. Pick up 100 projects within one industry, put it through your own model, and then get the extraction and get the best ones according to your own opinion that you developed. That would be my precise suggestion.
There were hundreds of new projects popping up every day. Now it's like 1, 2, 3. No?
Yeah, it's going to be much easier for us because last year deal flow was flooded with some bullshit, and now probably, you know, like the best project to the venture capital is going to go through the introduction. So if it's a cold mailing or something like that, it's probably a sophisticated founder who doesn't know how to get introduced. So good projects, they're going to find the way to get to the VCs. And this is even good for retail investors because you're going to get flooded with some stuff.
Yeah, I guess there is a different problem. It is difficult to get into good deals, into the good projects, because if you have a good project, you don't need to sell it. Everybody wants to buy it.